Welcome to House Lux Estate, the ultimate guide to your home financial needs. We're your trusted companion navigating the intricate waters of home finance, offering insights, advice, and solutions. Our mission is to simplify the complex world of homeownership, one topic at a time. Today, we're focusing on a subject that intrigues many: the pros and cons of using personal loans for debt consolidation. So buckle up as we dive into the fascinating world of personal loans and debt consolidation. Firstly, let's explore one of the main advantages of using personal loans for debt consolidation: lower interest rates. When you're juggling multiple debts, especially high-interest ones like credit card debts, it can often feel like you're running in circles, making payments, but never really making a dent in the principal. Enter personal loans. They often come with lower interest rates compared to credit cards, which can make a world of difference for homeowners. Picture this. Instead of paying a high interest rate on your credit card debt, you could consolidate that debt into a personal loan with a much lower interest rate. Over time, this could save you a pretty penny. Moreover, a lower interest rate means your monthly payments could be more manageable, freeing up cash for other needs, or even allowing you to pay off your debt faster. Thus, choosing a personal loan might just save you a significant amount of money in the long run. However, it's not all sunshine and roses. One of the main drawbacks is the potential for more debt. Remember, consolidating your debts does not mean they're swept away. They're still there, just gathered under one roof, so to speak. It's an easy trap to fall into, thinking that because you've consolidated your debts, you've somehow got more room to breathe and can afford to take on more debt. But that's not the case. It's like taking a step back from a jigsaw puzzle. The pieces are still there, they're just more organized. The total amount you owe has not changed. If you're not careful, if you don't manage your spending habits and stick to a budget, you could find yourself spiraling into even more debt. It's a slippery slope. So while personal loans can be a useful tool, they must be handled with care. Moving on to the next advantage: simplified payments. When juggling multiple debts, keeping track of various due dates and interest rates can feel like a full-time job. Consolidating your debts into a single personal loan can streamline this process significantly. Instead of several payments throughout the month, you're looking at just one fixed monthly payment. This consistency can be a real game changer. It allows for better budget planning, reduces the risk of missed payments, and can alleviate the stress that often accompanies managing multiple debts. Just imagine all your debts bundled into one neat package. It's like getting a monthly subscription to financial freedom. But keep in mind, simplicity doesn't eliminate the obligation. The debt is still there. You're just managing it in a more efficient way. So if you're looking for simplicity, a personal loan might just be your ticket. But as with all things, there's a catch. Let's talk about fees and penalties. When considering personal loans for debt consolidation, it's crucial to factor in potential costs beyond the monthly payments and interest rates. These can include origination fees, which are costs associated with processing the loan. They can range from 1 to 6% of the loan amount and are typically deducted from the loan funds before they're dispersed to you. Also, be aware of prepayment penalties. Some lenders charge a fee if you pay off your loan early, as this means they'll be missing out on some of the interest they would have earned. Finally, there can be late payment fees. If you fail to make your monthly payment on time, you'll likely be hit with a hefty late fee, adding to your overall debt. Therefore, always make sure to read the fine print before signing on the dotted line. On a brighter note, let's discuss how a personal loan can improve your credit score. Consolidating your debts with a personal loan can potentially enhance your credit score by reducing your credit utilization ratio. This ratio is a major factor in determining credit scores and represents the amount of available credit you're currently using. When you use a personal loan to pay off your credit card debts, you're essentially swapping your credit card debt for a personal loan. The beauty of this is that personal loans don't factor into your credit utilization ratio. This means your ratio decreases, and as a result, your credit score may see a significant boost. Remember, a good credit score is not just a number. It's a passport to competitive interest rates when you're shopping for a new car, a home, or even a personal loan in the future. A higher credit score can open up a world of opportunities, making this one of the most attractive benefits of personal loans. But before you rush off to get that loan, consider this: you might lose out on certain benefits. Now, you might be wondering, what benefits could I possibly lose? Well, when you consolidate your debt with a personal loan, you could be saying goodbye to some pretty significant perks. For instance, some credit cards offer interest rate discounts. These discounts can substantially lower the amount of money you owe over time. Similarly, with certain loans, you might be eligible for rebates. These are like refunds that can put some money back into your pocket. But here's the thing. Once you consolidate your debt, these benefits may no longer apply. The new loan will come with its own terms and conditions, and these perks often don't transfer over. This could lead to an increase in the total amount you owe. So make sure to weigh all the pros and cons before making your decision. So there you have it, the pros and cons of using personal loans for debt consolidation. We've taken a deep dive into the world of personal loans and debt consolidation, and it's clear that this financial strategy comes with its fair share of benefits and drawbacks. To summarize, let's take a quick jog down memory lane. Firstly, we discussed how personal loans can offer lower interest rates. This can be a significant advantage if you're currently juggling multiple debts with high interest. By consolidating these debts into a single personal loan, you could potentially save a substantial amount in interest over the life of the loan. However, on the flip side, we also highlighted the potential for falling into more debt. It's crucial to remember that debt consolidation is not a magic wand to erase your debt. If you're not disciplined with your spending habits, you could end up sliding back into debt, making your financial situation even more challenging. We then delved into the simplicity that comes with consolidated payments. Instead of keeping track of multiple debts, each with its own due date and payment amount, a personal loan for debt consolidation allows you to focus on a single monthly payment. This can make managing your finances much more straightforward. But let's not forget about the potential fees and penalties. Some personal loans come with origination fees, prepayment penalties, and other costs that could eat into the savings you might get from a lower interest rate. Then, we touched on the potential for an improved credit score. By paying off your debts in full and on time, you can show lenders that you're responsible with credit, which could boost your credit score over time. Lastly, we mentioned the possibility of losing certain benefits. If you consolidate certain types of debt, like student loans, you may lose out on benefits like income-driven repayment plans or loan forgiveness programs. Remember, the key to financial success is making informed decisions. So do your research and choose the option that best suits your needs. And that wraps up our discussion for today. We've journeyed through the intriguing world of personal loans for debt consolidation, weighing the pros and cons. We hope the insights shared will guide your financial decisions. Remember, HouseLux Estate is your reliable partner for home financial wisdom. So don't miss out on our upcoming content. Hit that subscribe button. Thank you for joining us at HouseLux Estate. Be sure to subscribe for more home financial tips and tricks. Until next time, stay smart and stay informed. A.